We take a look now at the economic week ahead with Nomvuyo Guma, who is macroeconomic strategist at Standard Bank, and Colen Garrow, who is economist at Meganomics. Starting with you, Vuyo, looking at the rand, the whole of last week it appeared that someone had nailed it down to the range between R8.65 and 8.66 to the dollar. 8.75 this morning, but Ian Cruikshanks was saying a moment ago, that's not the rand weakening, that's the dollar strengthening.
Hi, David. Yes, I think that comment is absolutely spot on. On Friday, the dollar received a huge boost from much better than expected non-farms payrolls number, and the previous month's number was revised upwards. So good news on the US unemployment front, and we saw the dollar strengthen, and subsequently we saw the rand kind of weaken. So certainly it certainly wasn't a rand movement, rather a result of a much stronger dollar.
Well, being reiterated is being reiterated by some of the commentary that we've been seeing during the rounds this morning. And Nomvuyo, there seems to be a theme developing in the market where the dollar is actually proving to be the main beneficiary of that kind of data, as opposed to emerging market currencies in general. That having been said, we've had the results out on a Reuters poll on Friday saying that the rand is seen gaining 5% over the next 12 months. So where do your forecasts lie, and how are you weighing domestic risk issues at this stage of the game?
Well, Alishia, it must be said that the underlying fundamentals of the rand, both domestic and as far as the global economy is concerned, aren't supportive of rand strength. So we've actually revised our rand forecast, and we see it ending the year at 8.75 and remain pretty much around that level headed into 2013. So we certainly don't see much room there for rand appreciation going forward. And it must be said that a huge domestic current account, of course, we have issues like Mangaung coming up in December, lots of policy uncertainty abounds. So while those domestic issues continue to weigh on the rand against an increasingly uncertain and unfavorable global backdrop as well, the rand is likely to remain quite vulnerable.
Going to you, Colen, over the past few weeks people have been saying, you know, our rand, it's got nothing to do with us. Then they were saying, no, it very much does have to do with us. It's to do with politics, it's Marikana and things like that. And now, again, it's not to do with us. Would you agree with Vuyo's assessment?
Yeah, I think you know, this time of year becomes quite tricky to forecast the rand. You know, we talk about the silly season upon us. So the rand is expected to do one thing, and it actually does exactly the opposite. But you know, I always go back to something more sterile and theoretical, which is the purchasing power parity of the rand. And surprisingly, since we last met about a month ago, the rand was sitting at about, on the PPP basis, was sitting somewhere in the 760s, and that valuation has now strengthened to 725. So, you know, as I said the last time, don't crucify me for the rand where it is, but that's the PPP, a theoretical valuation of the rand. And it has, I think, a habit of surprising us. When we expect it to weaken, it does exactly the opposite. So I'm somewhat hopeful that it does recover. I think the currency is undervalued against the dollar at this point. Making it very tricky is our politics ahead of Mangaung next month, US politics. I think the interest rate environment is still very, very supportive of the rand. The carry trade stretching all the way through to about mid-2015. If Bernanke's view on interest rates is right, the economy is recovering there a little bit. So I think we've got to be just a bit on the lookout for any change in that interest rate outlook. But I think for now, the carry trade is a very supportive argument for the rand. So I'm somewhat I wouldn't say dismissive, but I think somewhat cautious of calling the rand weaker. I think stronger. With
that being just some of the views that are out there, Nomvuyo, I mean, what's your outlook as far as net reserves data is concerned? We're anticipating those figures to be released for the October period come Wednesday.
Alishia, as far as reserves are concerned, we're seeing a slight dip is likely to take place. We expect that reserves are going to be hard hit once again by revaluation effects. In particular, we saw a much weaker gold price coming through towards the end of last month, so that's going to impact quite heavily on reserves, as well as obviously the strength that the dollar has gained relative to other currencies could then also affect the bank's forex holdings. So all factors taken into account, we're likely to see a modest retreat as far as reserves are concerned.
Colen, we want to get onto the US, the big picture, economic picture. I know you're interested in that, but we've got mining and manufacturing numbers out this week, and they are very important, partly because manufacturing is crucial, and mining because it's been in the spotlight so much.
Absolutely, David. mining, manufacturing account for about 20% of the economy. The figures are for September, so we've got the closure for Q3. And those stats are literally cut and paste into the Q3 GDP numbers, stats as they bring out on the 28th of this month. So it'll give us a fair idea of how weak the sector is, or the sectors are, and what their contributions have been to overall GDP.
Yeah.
The numbers aren't expected to be good. You know, we look at contractions on a seasonally adjusted basis on both mining and manufacturing. It's just a case of, you know, just how much that slowdown has been from the previous 3 months.
Nomvuyo, of course, if those that weakness comes through, and the weakness greater than what's being anticipated on either of those fronts or both of those fronts, it certainly will raise some of the expectations for a rate cut moving forward. What's your view on that front as we move forward?
Well, Alishia, it does seem that the debate over rate cuts really is becoming quite interesting, because quite apart from the GDP number, Stats SA is also set to release its updated income and expenditure survey, and of course that's where the weights for the new CPI next year will come from. So of course, if you have an upward revision of, you know, to the weight given to food, for instance, or to the petrol price or transport, you're likely to see that you know, that on a structural basis that could then move your CPI higher. So there's certainly going to be lots of factors for the Reserve Bank to consider, and of course all of these numbers, the mining and manufacturing, are going to be present by the next MPC meeting, as well as the updated CPI basket, or what we expect the CPI basket to look like for next year. So certainly this month's MPC meeting is shaping up to be quite an interesting one, but so far we haven't adjusted our view. We still think that there's room for the Reserve Bank to cut, and we've penciled in a repo rate cut of about 50 basis points by Q1 13.